what we are seeing in the IT space is definitely an impact of the tech stocks in the US not delivering value for US investors yesterday. But Gaurang Shah is here to bring us a clear perspective on what to expect in coming days from the Indian stock markets. Gaurang, Senior Vice President, Geojit Financial Services. Thank you so much, sir. Let's hear your disclaimer and then ask you the questions.
Thank you so much, Kartik, for having me on the show. Good morning to all the viewers of News9. Small disclosure, Kartik, we might go into stock specific, that all recommendations that I'll be sharing with you on the show are a part of our fundamental research team recommendations. Our company Geojit or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines and they might have their investment interest. So I think as far as the IT pack is concerned, I think it's a ripple effect or a follow-through effect as far as the correction that we witnessed in the Nasdaq and IT-related stocks. I don't think we should read too much into it. In fact, as a disclosure, Kartik, we have recommendations across the board in IT, small cap, mid cap, large cap, and more importantly, second quarter, third quarter numbers and the verbatim in terms of the business going forward is extremely positive, whether it is to do with AI or whether it is to do with data centers. And more importantly, the overhang that was there because of the US-India trade deal, that is now in the rear view mirror. Of course, we are yet to know the contours or the details of this particular deal, but nevertheless, the things are moving in positive direction. So I think it's a contra long-term call on IT.
Long-term call on IT, and you mentioned that it's also the small cap and the mid cap IT stocks that continue to be on your horizon. But let's move beyond the IT stocks and look at some of the other sectors which are likely to do well in the context of the reduction in tariffs. But curiously, Gaurang, I want your input on the steel and aluminium sector, because that was one sector which was kept outside of the overall country-wide slab and had a blanket 50% tariff. We don't really know, and so is the case in fact with the auto components, which were at a flat 25%. So while we await the final contours of the deal that you just mentioned, we are still seeing a lot of positive momentum in these stocks. Is the assumption fair to make at this point that perhaps the 18% is going to be universal across all sectors?
When it comes to Donald Trump as the president of America, you cannot have any assumptions, Kartik.
Okay.
We know.
But what assumptions should investors work with right now who are looking at at the green shoots in the market? What should their assumptions be?
So, no, I would say that wait out, Kartik. We don't know the details yet, right? I was reading a report this morning which said that in the next 2-3 days, respective representatives from both countries, US and India, are going to address the details of the trade deal.
Yeah.
So, instead of jumping the gun and assuming a lot of things, I don't think that will be a good strategy.
Okay.
For speculators, I have nothing to advise because I'm not in a position to advise to speculation short to medium term. Long term, if you really want to understand, first understand what the deal has to say, right? And I have got a little bit of confusion as well. Look, 25%, the initial reciprocal tariff has been brought down to 18%. But I don't have clarity as to what is the status of that 25% additionally because of Russia imports that we used to do, right? We have, of course, a lot of reports are there that we've reduced or virtually gone to zero, but there is no clarity over there.
That's a statement that also came.
Wait out.
Yeah. So, sure. I mean, in fact, that clarification, Gaurang, also came from Sergio Gore, the US ambassador to India, who said that the 25% tariff on the secondary tariff on India's import of Russian oil also ceases to exist. But questions are still hanging large on whether or not India continues to buy Russian oil while the quantity has declined, and that's the data we are picking up. We are still buying Russian oil technically. So you're right. I think at this stage, a lot is in that fine print, and only once a joint statement is released will there be some real clarity on where markets are headed. But overall, the sentiment is definitely shifting towards the positive territory, especially after the sort of meltdown that we saw on Sunday, Budget Day. We are seeing that sentiment in the Indian market has definitely moved towards the positive territory. So at a time like this, better to stay invested in your SIPs, better to buy an index fund which is well diversified, or just pause all your investments and wait for clarity?
No, pause is definitely not the answer to all these things. I think continuity is something that you should definitely have.
All right.
And it all depends, Kartik. If you are a low risk appetite, go to index funds. or index related, Bs, etc., Nifty Bs, etc. If you have a little bit of elevated appetite, you can look at large cap, mid cap selectively, sectorially. Small and micro cap is something that I would say that only those who have extraordinarily elevated risk appetite should venture into it, because there is still a lot of catch up to do in terms of earnings and what the valuations are.
Okay.
So my sense is that continue your SIPs, continue your investments into equity market, whether it is direct or via mutual fund SIP or a lump sum investment.
Okay.
Look, we corrected quite a bit. We have recovered also some extent. And I think once we have this clarity, the moves towards a new all-time high cannot be ruled out.
All right, a move towards a new all-time high cannot be ruled on, and potentially it might have actually touched that all-time high had the deal been announced on the Friday before budget and not the Monday after budget, because that is where the markets are coming back up from. But Gaurang, I want to spend some time, maybe a minute or so on energy stocks, Reliance Industries in particularly, directly impacted by, India buying or not buying Russian oil, India buying or not buying, or increasing or not increasing American oil, India buying or not buying Venezuelan oil. Overall, the energy prices are likely to hopefully remain stable unless there is a flare-up in West Asia. At a time like this, how are you looking at energy stocks?
Kartik, the biggest joker in the pack is the geopolitical situation and the aggression from US on Iran.
Okay.
And as we all know, Strait of Hormuz happens to be one of the most important transit lines for the supply of energy to the rest of the world. Now, if this particular situation has to take an ugly turn, and if the Strait of Hormuz is freezed or restricted for some time, then the crude oil prices, natural gas prices will go up momentarily for some time, short to medium term. Historically speaking, and of course the outlook that has been shared in the reports that I have read is, those reports say that Brent is likely to be sub $65 a barrel, and NYMEX is going to be sub $60 a barrel. It is not that a huge consumption demand has come up on the horizon and these prices have moved upward north and they are going to stay that way. No, it is not that. It is only momentarily. So yes, on Reliance Industries, we have a positive coverage. It is not only this energy play, it is now a well-diversified company,
Telecom.
And new businesses are contributing to a great extent.
All right, point well taken. And while we are talking about oil prices, the possibility of even a temporary blip or a temporary shoot up in oil prices, overall stability is likely to be maintained in oil prices with so many diverse sources now adding to the pool. So India is unlikely to import inflation in the near term, Gaurang, is the hypothesis we are working with. In that context, RBI Monetary Policy Committee that goes into meeting today, rate decision to be announced on Friday. What exactly are your expectations when we are in any case in a fairly low inflation scenario, and that low inflation is also reducing our nominal GDP to some extent?
So Kartik, this low inflation has to be there over a prolonged period of time. Look, last year 2025 we got a cut of 1.25%, right? My assumption is, this is my assumption, my personal view is that we'll have to wait for the new financial year, 1st April 2026 onwards, for any kind of further rate cuts to come through. I think Jan, Feb, March possibly are going to be a month where there is going to be a pause. However, the commentary is something that we'll be looking forward to, and I think the commentary is going to be very supportive. And in case look, monetary credit policy platform is not the only platform wherein rate cuts are announced, right? We have had it before, even outside the credit policy, whenever it is feasible, the RBI and the Monetary Policy Committee has taken the steps accordingly and cut the rates. So I don't think Friday is going to be a date when you will meet up with one more rate cut. I think we'll have to wait out.
All right. So no rate cut expected on Friday. We will have to wait it out. Meanwhile, markets have gone back into the green territory this morning. We are seeing Nifty 50 above the 25,780 level. Sensex nearing that 84,000 level. Hopefully right now about 150 points short at 83,850. We leave it at that. Gaurang, Shah, thank you so much.